Bitcoin, Warner Brothers, Sony, ApeCoin, Circle, Kohl's, Bed Bath & Beyond, Delta Airline, Tether, Twitter.
Hello, hello, hello. James here from TradingView and welcome back to our weekly Snaps Roundup where we cover the stories that you may have missed from across both the stock market and crypto land. Without further ado, shall we get going? Yes, we shall. Bitcoin heavyweight Blockstream and Twitter's founder Jack Dorsey's payment firm Block tag teamed to buy up some Tesla tech and create a Bitcoin mining triple threat. The sun giveth and the miners taketh. Blockstream and Block will start using solar energy to mine Bitcoin using a 3.8 megawatt Tesla solar PV array and a 12 megawatt hour Tesla Megapack, that's a lot of megas, to supercharge the mining facility. The mega project is set to cost $12 million and will launch later this year. Sustainable mining has been something of Bitcoin's Achilles heel, so the trio want to prove that it can be mined on renewables. And their later version will also include an eco-friendliness rating. Oh, it's a brave new world, all of this. But it's not that easy being green, it has to be said. Bitcoin closed down the first week of April, down 9.2% in its worst performance since January. Despite Bitcoin Miami 2022 bringing the hodlers together, joined in the downturn by almost all the major coins, except Doge, which had Elon Musk and his affections to thank for a slight rally. Now somebody called Jack because there's a new, hopefully friendly, giant at the top of the streaming beanstalk now that Discovery's mega merger has closed. HBO Max spent the weekend of April 9th settling into Discovery Plus after saying goodbye to AT&T, having successfully closed its history-making $43 billion merger on Friday, April 8th, following final shareholder approval. The two streaming platforms are eventually expected to merge and create what the brand said will be the most differentiated content portfolio in the world. Ambition is key, they say. The combo company started trading under the WBD ticker on Monday, April 11th, and hopes to compete with the streaming original gangsters. But even if you combine HBO Max's 74 million subscribers and Discovery's 22 million, it's still a far cry from Netflix's 221 million users. Sony is making sure to be at the forefront of metaverse efforts, having backed Epic Games, you know, the Fortnite folks, as the winning horse with a $1 billion investment. Epic Games just raised a total of $2 billion from Sony and the group behind Lego to help build its gaming metaverse, which is now all the hype right now. And it's all in a deal that values Epic Games at $31.5 billion, a valuation that rivals public game rivals like Take-Two Interactive. It comes hot on the heels of Epic's deal with Lego last week, which saw the pair partner to co-develop a family-friendly metaverse for children, highlighting big businesses' interest in hopping onto the metaverse train. Choo-choo! Epic Games doesn't necessarily need the cash though, but it might do soon. The brand is in the middle of a legal kerfuffle with Apple and Google over App Store commissions, the outcome of which could hurt its mobile revenues. Bored Ape Yacht Club is getting 3 animated movies produced by Coinbase less than a month after the launch of ApeCoin, topping off what has been a pretty cinematic Q1 for the token. Bored Ape owners are invited to contribute to the trilogy by submitting the character represented in their NFTs as potential movie stars. And the Primates will need their tuxedos for June, with the first release scheduled for then. Those who want to watch the movie though will need a Coinbase wallet. Pretty handy for the exchange giant since it may coincide with the launch of Coinbase NFT. You maniacs, you blew it up. Yep, afraid so. ApeCoin fell 9% after the news on a bloody day in the crypto market on April 11th. Otherwise though, Ape has been pretty kind to its investors, up over 100% since it landed on this strange planet that we call crypto. It seems department store Kohl's has a line going right around the block, and it's filled with hedge fund investors trying to get the company to sell. Franchise Group put in a $9 billion bid to buy Kohl's as the retailer faces activist investors claiming the chain is underperforming competitors and pressuring it to sell. This is the 4th bid that the brand has received, and it's not even the highest. Kohl's board isn't keen to say goodbye though. No. The retailer sent a strongly worded letter to its investors at the end of March, urging them to refuse activist investors' efforts to gain control of the company and instill its board members. Shares jumped 5.35% on the news though, after gaining 17% on March 16th when the offers started rolling in, so investors seem to be on board with the idea of some sort of sale. The retailer has engaged with over 20 different potential buyers, so clearly interest is wide. The Circle family has got a whole load bigger after a bunch of investment giants splashed the cash to drive growth in its economy. Circle has raised a whopping $400 million from big dogs like BlackRock and Fidelity in the fintech's latest round of funding. The round is expected to finish in Q2, so we could be seeing more cash coming in soon, potentially just in time for its SPAC, which is expected sometime later this year or perhaps early 2023. The investment will help USDC's cash reserves, with BlackRock becoming the stablecoin's primary asset manager. Even better for Circle, stablecoin rival Tether has problems in that department, under scrutiny by the cryptoverse since being fined for lying that their stablecoin is 100% backed by fiat. USDC is growing in popularity, coming in at number 2 in terms of stablecoin market cap, with Lightning Labs announcing its plans to introduce stablecoins to the Bitcoin Lightning Network and the UK government planning to recognise and regulate them too. Circle is sure carpe dieming right now. Turns out home goods aren't first on people's shopping lists in times of economic uncertainty, so Bed Bath & Beyond has been paying the price instead. Bed Bath & Beyond stock fell 12% in morning trading on Wednesday, April 13th, before closing down 1.27% as investors reacted to the brand missing on both ends, with losses per share of 92 cents versus the 3 cents that was expected, on revenues that were down 22% to hit just over $2 billion. It's been struggling big time with port congestion and low inventory, and said out-of-stock merch caused the company to miss out on $175 million in sales. Not only that, but it's competing with decades-high inflation and soaring interest rates, which is all hurting consumer sentiment. All of this has slowed down Bed Bath & Beyond's turnaround efforts. CEO Mark Tritton came over from Target and has been trying to refresh the brand in the wake of the meme stock rally last year. But these earnings will likely cement activist investor calls for a shake-up after GameStop's Ryan Cohen called out the company for failing to have a solid strategy. Airline stocks have been flying all over the place this quarter, but Delta earnings indicate that it could soon be time to take off the oxygen mask and enjoy clear skies. Delta shares jumped 6.2% on Wednesday, April 13th, to their highest level since late February after handing out mixed earnings, reporting a narrower than expected loss of $1.23 per share on revenues of $9.35 billion, which is still off 2019 levels by around 11%. Airlines are experiencing the strongest travel demand in over 3 years, helping to offset rising fuel and commodity prices. Delta logged its highest bookings ever in March this year and plans to ramp up its schedule this quarter to fly at 84% of its 2019 capacity. But flights aren't the only thing set to take off this summer. Delta has said it expects the current quarter to turn profitable, saying revenue should come in at around 97% of pre-pandemic levels. That's a better recovery than people were hoping for, and the bullishness sent the other airline stocks soaring as well. Tether has been cutting down on its commercial debt as peeps try to work out just how much cash the stablecoin actually has in its reserves. Tether is reducing its short-term corporate debt, otherwise known as commercial papers, on its balance sheets. The crypto firm already reduced its commercial papers last year from 44% in Q3 to 30% in Q4. And this is part of an effort to get its stablecoin fully backed with the fiat it safely has in its pockets. The crypto firm got itself into something of a pickle back in 2019 with the Commodity Futures Trading Commission. In a court fight with the CFTC, Tether was fined $41 million for making untrue or misleading statements that USDT was backed 100% by fiat currencies. Then it got banned from operating as a business in New York. Oof. USDT is the biggest stablecoin in terms of market cap, coming in at around $82 billion. If it were ever to lose its dollar peg a la USDN due to reserve issues, the cryptoverse would likely find a new layer of chaos. Elon Musk has made a bid to buy Facebook. Nah, joke. That's probably for next week. No, he's actually going to settle for 100% stake in Twitter instead. Musk has made a one-time offer to buy the whole of Twitter, saying in an updated SEC filing that he will pay $54.20 per share, around $43 billion total, to buy the whole business. Naturally, he had to sneak a 420 into that offer, and I'm glad to see that some things never change when it comes to Elon Musk. The bid represented a 54% premium on Twitter's price before Elon invested in it, and an 80% premium on Wednesday, April 13th's closing price of $45. He says the site has the potential to be a global free speech platform, but will neither thrive nor serve this societal imperative in its current form, so he wants to transform it as a private business. Prices went soaring over 18% in pre-market trading on Thursday, April 14th, having already gained over 16% since first disclosing the stake. However, Musk is also getting sued by shareholders in a class action lawsuit for not unveiling the first buy earlier, saying that that was a purposeful decision so he could buy more stock at an artificially deflated price. Goodness knows what's actually going to happen by the time we release this video. Okay folks, that is all we have time for. We really hope you enjoyed the show. If you did, please feel free to like and subscribe using the buttons below. But until next time, wherever you are, whatever you're doing, look first, then lead.